Tell me one thing that's surprising about publishing a book that you didn't think would be so hard or difficult or just different than just tech.
I just wrote in like awkward little chunk.
I'm guessing that process is so much easier today with everything from OpenAI, Whisper, and all these like voice to text apps.
I spoke to dozens of other authors to get what did they do when they were promoting their book and what worked and what didn't work. So I went the traditional publisher route for a number of reasons. Traditional publishers weren't putting as much time and effort and money behind first-time authors. Write yourself a prompt for all the things that we've done before so that when we finally get it up there, you can just run your own prompt and it'll clean it all up. The other thing that was a pleasant surprise to me was it was an interesting opportunity to play with GenAI.
What are 2 or 3 very high level tips of reaching out to VCs on how to perfect that pitch and then figuring out what strategy of communication works?
I'm debugging it back and forth with it. I understand why it didn't work. I'm going to try this instead. What's unique about your startup?
LLMs are sort of smart but dumb at the same time, where you just really have to know how to prompt it.
All the cold emails were actually led to investments.
Hey guys, welcome back to Funds and Founders. Today we have on Andrew. Andrew's been in various CXO roles. He's founded various startups, started a venture studio a couple years ago, is currently head of Reach Labs and strategic advisor to Second Century Ventures, and you recently published a book called The Entrepreneur's Odyssey. Welcome to the show, Andrew.
Here.
Why don't you quickly tell us about what the book is? Why did you decide to write a book? And how long did it take from when you said, I'm going to write a book to like the book is available for pre-order now?
25 years.
Okay.
Now, so, here's the background. You talked a little about what I did. I got my start, standard business school student, Chicago booth. And while I was in school, one of the textbooks we had was a book called The Goal. And it was written like a novel. It was about like a guy trying to turn around a printing plant in the Midwest, didn't know what to do, and then this consultant kind of took him under his wing and mentored him through the process. So it's not like great literature, but it was far more memorable than any textbook I've ever had, and that's the only one I remember. So it stuck in my mind for all those years. So fast forward to about 2014, when I've transitioned from being a founder to running an accelerator program, and as I'm running this program for Green Adventures, I keeps coming back to me like I gotta write the goal, but for startups. I gotta write like the journey of what it takes to be a successful founder that starts in like crappy law firm evening pitch event where the solo founders have ideas and ends with them raising their first round of financing. I want to tell that story. I want to tell it like the goal. And then, for several years, I did nothing about it. I had no time. And then somewhere around post-COVID, where I went from doing one thing 180% of my time to doing 7 things, about the same percent of my time, just more breaks, awkward breaks in between. I finally said, if I don't write it now, I'm never going to do it. So the less flip answer is I came to that decision. I actually sat down and started like outlining it probably a year and a half ago. Spent 20 minutes outlining it. And then the rest of the book, because I have horrible work habits, the rest of the book was me being that strange guy in a subway car muttering into his phone, speech to text to Google Docs, 3 minutes at a time. I just wrote in
Nice.
like awkward little chunks.
I'm guessing that process is so much easier today with everything from OpenAI, Whisper, and all these like voice to text apps. But tell me one thing that's surprising about publishing a book that you didn't think would be so hard or difficult or just different than just tech in general.
I'll give you maybe 2 answers for that. Right. So one I sort of knew because this is going back to 2012. I almost did a startup in the publishing space. And even back then, even traditional publishers, I went the traditional publisher route for a number of reasons. Even back then, traditional publishers weren't putting as much time and effort and money behind first-time authors. Even
Yeah.
if you went out there and you had like a really great name behind you, and I actually, by total chance, the publisher that publishes my book, The Entrepreneur's Odyssey, is the same publisher that published The Goal 40 years ago. So it kind of came nicely full circle.
Full
But
circle,
even though
yeah.
they know this, and this is kind of business fables are one of the things they do really well, and they know the academic track and they know the business track. I didn't really expect much in the way of support. I didn't expect them to send cars for me to take me to book signings or even arrange book signings for me. But if you're new to the space, the fact that like even with a traditional publisher, you're getting very little formal like marketing support would have been a surprise. So that's one thing. The other thing that was a pleasant surprise to me was it was an interesting opportunity to play with Gen AI in a way that I never would have played, if I were just doing it in like the investor context. I can give you an example if you want.
Yeah, please do.
So this example ends with a moment where I had to change my underwear because I thought Google canceled my Gmail account. Uh, sorry, I like bottom line up front. So go
Yeah,
about
yeah,
doing
yeah.
this at home. So I spoke to dozens of other authors to get like, what did they do when they were promoting their book and what worked and what didn't work. And there were a couple of commonalities. One was you got to send the blast email out to everybody. Like, don't be shy. Tell everybody. So I'm not shy. No one's ever accused me of that. But I do feel like, you know, I don't want to be that guy. Like that guy that sends like everybody the same BS uncustom email. So I'm like, I can do better than that. Like, there's got to be some way I can segment my contact list and send at least semi-custom emails out. So, first I think I download my contacts and I realize not everybody who I'm in contact with is actually a contact in Gmail. So it quickly comes to me that the way I need to do this is I need to access the header info on all the emails I've sent to figure out who I've talked to recently and who I've talked to about the book or not talked to about the book, who I haven't spoken to in a while. So I can at least come up with a couple of different types of emails. So I go down this big rabbit hole. Like, can I download all that information? No, it's too big. An add-on. Well, there was one, but it was discontinued 2 years ago. It doesn't work. Okay, no good. Browser plugin. I got so many browser plugins, it looks like a Pandora bracelet, and they don't all work very well. Ultimately, I'm like, okay, Google Apps Script. That's awesome. One problem. Like, I know a little JavaScript. I can't code an app
Yeah,
script myself. So Gen AI to the rescue. Uh, so I Google around like, is there a script that does what I want it to do? So naturally, I end up in Reddit of all weird places, and they're like, here's a script that does most of what I wanted it to do. So I take it, plug it in, doesn't work, and then there's a link to an AI tool called Poe, which I believe is supposed to be good at programming and doing these scripts. Okay, I'm game. So hey Poe, your script timed out. Can you fix it? And like, yeah, I'm happy to do that. Very active, very polite, very happy, super quick. Just not a very good programmer. Like,
yeah.
I'm debugging it back and forth with it. Like, oh, I understand why it didn't work. I'm going to try this instead. Still doesn't work, dude. So I go down like a 4 hour, 5 hour rabbit hole there, and I get as far as I can get. Like, it's just, I mean, it's not good. I've just about resigned myself to the fact that like I'm going to send that email out. And I'm talking with the guy who I'm building a startup with on the side. Ironically, by the way, speech to text startup, dumbed down version of that is the startup in the book. And of course, I wrote 80% of the book using speech to text.
Nice.
I asked him, hey, this is what happened. He's like, well, have you thought about using Gemini? Because it's a Google Act script. So why don't you use a Google Gemini? I'm like, Wes, if this works the first time with Gemini, I'm going to, don't worry, let's just say if it didn't even remotely work the first time, but it fails in a different way. Like, the variables aren't properly defined. So I keep working with it, and it can't figure that out. Like 4 hours later, I'm like, Gemini is not going to get there. We may cut this whole part from the real podcast, who knows? But in desperation, I grab the code from Poe, and I take it, I paste it into Gemini, and I say, here's another approach. I can't seem to get this script to stop timing out, but maybe, this will work better. And Gemini's like, oh, I can fix that. And 4 hours later, it actually did.
Nice.
I went from like one tool to the other. And then when I wanted to like create like whitelists and blacklists or whatever we're calling them these days, like I wanted to send this email to them. It turns out neither Gemini nor Poe will actually I don't think any AIs I've played with will read your Google Sheets directly, but neither Poe or Gemini let you upload an Excel spreadsheet. So then I had to download everything into Excel and upload it into ChatGPT, who will take an Excel spreadsheet and read it. Only ChatGPT will tell you they've read it, even though they didn't read 2 of the 5 files. So when
Yeah.
I'm done scrubbing all the data, I'm like, well, where's all this? And I go back to the beginning. But I got smart actually. The third time I did this, and I left data behind, I said, "Hey ChatGPT, I'm tired of writing the same prompts to like clean up the data. Write yourself a prompt for all the things that we've done before, so that when we finally get it up there, you can just run your own prompt and it'll clean it all up." And it did.
Yeah. I feel like LLMs are sort of smart but dumb at the
Yeah.
same time, where you just really have to know how to prompt it and like get the right answer out of it.
But we're seeing some startups and even like large companies with titles like chief prompt engineer.
Yes, I've seen some
So
of these,
it's
yes.
interesting. I think that's a transitional title. I think at the end of the day, like as people get better at it, or the tools get better at like prompts that aren't perfectly constructed, that'll sort of go away. But for now, you're absolutely right. You got to ask the prompt, do it right, and then even then, expect that it's going to be an iterative process, and then just try different things.
100%. Tell me one thing. So, talking about the book, who should be reading it? Who's it meant for? And who should be ordering the pre-order?
Um, Probably should have started with that, right? So the short answer is everybody. But I'll tell you why everybody, right? So number one, if you have a startup and you're about to start that journey, I guarantee you, if you read this book first, you will not make the same stupid mistakes that all of us did on our first startup. You'll make whole different mistakes, but they won't be obviously stupid, and you can own those. But you'll avoid a lot of the stupid mistakes. You'll understand things like how do you really get inside the mind of your customer? What are different types of revenue models, including some I guarantee you've never even heard of. How the correct way to find and get in front of investors are. Well, you may get one or two of those right on your own, but like if you want to really avoid a lot of the obvious mistakes, this is the way to do it. And
Nice.
if you are a second time founder, you'll appreciate it because you'll be like, oh, I learned that one the hard way, but I didn't know this. And the other groups of people who might find it interesting is like you have a corporate job, you're thinking about leaving to do a startup,
An
but you
idea.
don't really know what the startup life is like. And startup life is not like the Steve Jobs biopic, right? It's not like that. It's not glamorous like that. It's cool and exciting in its own way, but it's very different. So, like, if you really want to get that feeling. That's one of the reasons I wrote this like a novel. I want people to get the feeling for what it's really like to be a fan, like on their gut level, in a fable, like a fable sort of way, memorable sort of way, an emotional sort of way. And if it's not for you, like hopefully I've saved you a whole bunch of pain and suffering.
Where did your journey start? What was your entry into entrepreneurship?
So where I am now is the only thing that sort of makes sense of my career path. At the time, it was kind of all over the place. So I started off, I went to business school, came out and did consulting for 4 years. Like back then, there were no entrepreneurship programs. Right? There was one guy in my entire class that went into VC, and no one quite knew what Ben does. Of course, the irony is like I speak to Ben several times, a month. I saw him 2 days ago because now I'm in his space, but no one knew what VC really was back then. I did consulting for 4 years. I was hoping I'd fall in love with an industry and then end up running with it. Didn't happen, but the internet did. So around 99, 2000, I'm like, wow, this stuff is really cool. Now I know what I want to do. It just didn't exist when I wanted to do it. Quit
Yeah.
my job, moved back to New York. Within like 9 months, I'm the third founder of my first startup. 8 years later, I'm bought out. Uh, Longest story to go with that. And then I worked at a family office. Okay, one side of the table. Now I'm on the other side of the table. Then I was recruited to do a startup, so back on the other side of the table. That was crying and
So,
feelings and lawsuits, and needless to say, I learned a lot more
so,
from that than anything else.
so going back to the first startup, you said it was 8 years, you got bought out. You don't have to say numbers per se, but just from like a holistic perspective of you were in the weeds for 8 years. How good, bad, grueling, or like I don't want to use negative words, but like, what were those 8 years like? And was the buyout worth it? Just looking back. Because I think one thing I want to highlight is a lot of people look at these glorious titles of like, look at this guy who sold, this guy who exited. They don't tell you the reality of like what actually hits your bank.
Yeah,
And no one's asking, no one's talking about it, right? But you have the titles. Like the title is you sold for 100 million, but did anyone know that because of the way you signed term sheets, you made like 500K? Like, is it worth it at that
yeah.
point?
So
But just briefly touching on that, I just want to highlight that of that part. Yeah.
yeah, no, that's a great point. You're absolutely right. Like there are guys who sold their company for $10 million, made more money than the people who sold it for $200 million. And it all has to do with how much money they raised along the way. My startup was 2000 to 2008. And if you've heard it before, the highs are highs and the lows are low. Like I remember really well when our main competitor went out of business. It was awesome. And then I also remember when the market crashed in 2001 and we went without salary for a year. That's
Yeah.
amazing. right? If I ever did the math and I said, like, what would happen if I just got a steady paycheck that went up 5% a year, got my bonuses at the end? I got bought out by management. I wanted to sell the company a little earlier. The CEO didn't. And we agreed because it was a seasonal business. So we agreed I'd stay on for a year. I'd find a replacement, train him up, and I
Yeah.
get bought out gradually. I got my last payment on January 2nd, 2009. And if you remember, that's like the entire world is collapsing. And like the CEO, was sitting there and he's like written the check and he's like holding it out to me. He goes, I think maybe I should have taken the offer. So the company itself was purchased 5 or 6 years later, just about the same valuation that I got out of. And no one talks about that. But like I could have stuck around for another 5 years and gotten no more than I got
And
when I left. Alternatively, I could have left 3 years earlier, not gotten my money until they sold because it would have been stranded. Like you can't do anything, you can't get your money out. But I could have gotten into maybe VC in 2005, which was really an awesome time to be in venture. If I'd gotten a little lucky, like I'd be like a decade ahead of where I am now.
yeah, it's all hindsight. It's all like I feel like the perspective is very results oriented because it now it's a good time for, but yes, I agree with what you're
You ever
saying.
hear
Yeah,
the phrase survivor bias? So
yeah,
I
yeah,
heard it first when I was running the family office around hedge funds. Like all the hedge funds seem to be 75th percent. They're all like outperforming the market. It's because the ones that didn't, you never see again, right? They shut down, they go.
100%.
So the story you're likely to hear are the good ones. Like, oh, it turns really, and or the epic fails and like
Yeah,
are interesting. The ones where like people ground away at it for a year and a half and just couldn't make it work or couldn't raise the money and then quietly went back to like a corporate job. You don't hear those stories because those aren't interesting stories, but they're
100%.
yeah, probably they are the majority of the startup story.
Yeah. You go from a buyout to working at a family office. What is the biggest mind shift that happened in realization of being on the other side?
Should have had a boss again, a different kind of boss, right? So like obviously we had a boss. I was a COO of my first startup, and I had a CEO. But a lot of the startups are very consensus driven. Like ultimately, it's the CEO's call, or however we split up the equity. But it tends to be very collaborative, especially if the team has made it as long as it has. Then I came in and I'm working for a guy. And he's the kind of guy that was born on second base, thought he hit a double. So, everything was like anything good was like, oh, I'm a genius. Anything bad was like, that was your idea. Like, got the
Yeah,
email from you and you told me to do it. I told you, no, no, don't make me do this.
yeah,
So it was in some ways it was soul crushing, and in other ways, like I got to a whole different part of the ecosystem. Like I got to learn this was a horrible time to be in this position given what was going on in the world around me. But there's a whole secondary market for positions in LP positions, meaning as investors in the VC fund or private equity fund. Like I thought you're in and then you're stuck, right? You get a capital, you gotta pay, or default, they take it away from you. You get a distribution if you're lucky, but not in those economic environments. But it turns out I can take my commitment, and if I find someone, which is really hard to do because there's no market, but if I do, they can buy my position from me with the consent of the fund. I didn't even know that could happen. But there's a whole cottage ecosystem people who make those connections happen. And I wouldn't have ever learned about that if I hadn't worked at a family office.
what's different amongst all the financial institution types? What's the difference in a family office, a PE, a VC, anything that stands out amongst how these guys operate and deploy
Sure, sure.
capital?
So if you worked at one family office, you worked at one family office. They're all different. So it's very hard to generalize.
Okay.
Some family offices are almost as professional as a private equity fund. The larger multi-generational family offices can have multiple people, each one specializing in an asset class, and a whole second group of people who deal with the philanthropy. On the smaller end, you have like one or two professionals. So I was one investment professional, and there was a bookkeeper, kind of it for the family office. A lot of other people like staffing his houses and stuff, but that's not the same thing. So it was super kind of on a shoestring in like one back room in one of his houses, and I ran all of that. It's very different. The other thing that's very different is if you are working at a very large pension fund, you tend to have a top-down allocation. I want to put this much in the
Got
public
it.
market, this much into equities versus debt, this much into private equity or alternative. In that, as much to accumulate large private equity funds, this much to venture, this much to hedge. You've got that allocation top down. Well, within it, once you've figured out what fits where, you can decide which ones you want to do more or less. Now, the downside to that is, let's say you have a large stock market crash, like we've been having these past couple of days. Now, the value of your public equities investments is lower, so now your allocation's out of whack. So for no reason other than this asset class over here tanked, now I need to trim these assets. But these assets,
Because your percentages
my
need to
percent,
stay
yeah,
the
they need to
same.
stay the same. So I need to kill my winners because something else went down, which is screwy, right? At a family office, you don't need to do that. But on the other hand, the flip side is you get shiny toy syndrome. Like, oh, I want Facebook stock now. Go find me that. My first job at the family office is like, oh, it's kind of interesting stuff going on Facebook. I'd read about people being able to buy and sell private shares. Didn't know that existed either. But it was really hard to find people. There was no marketplace for this. And I mentioned it, and I'm like, seems like this is, Microsoft had just put in money at like the ungodly valuation of $15 billion. Like that we thought was like crazy. So I said, there's this is going on where people who are leaving are selling their options on the way out. My boss was like, well, get me out. All right. So I'm like, okay. So I got it. Actually, it's a funny story, which I'll tell you if you're interested. So there were two people mentioned in that article. One kind of felt a little sleazy, and I didn't want to do it, but the other guy seemed reasonable. Um, but I couldn't find anything on him or his company on the internet anywhere. Anywhere. I'm like, well, how am I gonna get in touch with this guy? So I get his telephone number and I call him up. And I say, hey, I'm looking for so and so at such and such. He's like, how did you get this number? And I said, um, is this so and so? He goes, yeah. So well, I'm looking to source some Facebook stock for family office. You were quoted in the article about having people who are leaving who are interested in selling. If you have some Facebook stock, how about at the end of the call I tell you how I got your number? So he totally forgets. I sourced like $500,000 worth of Facebook stock at what was then the equivalent of $1.35 a share.
Yeah.
And the guy comes to New York. We're catching up, finally meeting face to face for the first time. He's like, "Well, you never told me how you got my number." And I said, "Oh, for a guy that's trying to keep a low profile, you should probably have an unlisted number." I called 415-555-1212. Company name. I got the number. So 2 days later, he got an unlisted.
Oh, where do you go from that? So you're at the family office, you're learning the other side. What's the next step?
So I'll try to give it like a little bit of a linear projection, right? So I did a startup. The family office part they didn't tell you about was in addition to like the big boring private equity and hedge funds, the principal wanted someone who could incubate ventures. He didn't know it. No one called it this at the time, but he was trying to create like a mini venture studio. He figured I can only afford one guy. I could get someone who comes from the private equity world, but he won't know innovation at all. I can't teach him that. Or I can get someone who comes from the startup world and gets innovation, and has a decent business school background, and I can teach him how I want him to do my private equity and hedge funds. That's a pretty smart thing, I think, anyway. So I had the opportunity to incubate a couple of different ventures that I thought were actually reasonably interesting. The boss, like, he thought about hedge funds like I can look at a hedge fund once every month, take an hour, 2 hours, look at the positions, decide if I want to stay in or not. He thought you could salami slice startups the same way. But ultimately, like, I'm not really happy there.
Got it.
I decide that I want to leave. I start looking, and I get recruited for the second startup. It was just friends of friends of friends. That's often how these things come to you. Um, didn't work. We talked about that a moment ago. And as I'm wrapping that up, ultimately, I get connected again through some writing that I had started to do. I get connected with Dream Adventures, the third oldest accelerator in the world. Now, at the time, Dream, it's your archetypical pre-seed program. Sit your butt in a chair for 3 months, and we'll bring you speakers, pizza, beer, and then down. Okay. But
Yeah.
I'd started to do some angel investing. I'm like, this is cool. Let's do that. I did that for a couple of years. Then we decided, no, we don't want to do that anymore. Let's go later stage because we want to be number one, and we're not going to be number one over here, but no one's doing it for post-revenue pre-series. I guess I'll stay a little longer, build this new model. So build a new model, later stage startups, vertically focused, about 65% remote pre-COVID, and we start investing. So I went from doing angel investing to doing generalist investing, 5 startups and another 24 startups. Then we did 16 ed tech investments. I did 31 investments in prop tech and construction tech. All of them, of course.
Out of those, how many are alive? How many have you exited? How many died?
So I don't have the numbers for the 70 as a whole, because they're less relevant to me. But of the 31 prop tech or construction tech companies, one's had a good exit so far. It's a little early for the rest of them. Say 10 to 12 of them are dead. Uh, about 10, almost about the same amount, are still alive and kicking and doing pretty well. And I think they'll have really good exits, good to great exits. Then the middle 10 or so are kicking along. They'll grow.
They may survive, they may
No, I think
not.
they'll
You don't know yet.
survive, but they're what we call, potentially lifestyle businesses. They'll never be
Yeah.
huge.
You're not going to make 100x or 200x on
And
that
like the
money.
dirty
Yeah.
little secret is if a company makes me 3x in 10 years, that's a loss. Right? I can't do that. Like I need there to be companies that are doing 10 or 50x to bring the everything up. So, you know, for 3x in 10 years, put your money in the stock market, you'll do better.
Yeah. And that's one thing I tell a lot of founders who are looking to raise. And again, I've never raised, so this is not experiential opinions, but it's more I feel like when people go to raise money from VC, their expectations are off, right? You want the money, but you have to understand why the VC is giving you the money and what he wants or like what they want. Do they want a return? They want a high return depending on what point in their fund cycle they are. If they're closer to the end of the fund cycle, you have lesser time to produce a return than someone at the start of a fund cycle, right? And so there's all these nuances to your point of how the VC is making the decision that founders just tend to not think about in the moment. And then when you're like, hey, why are they pressurizing me? Because they need something. They want some return, right?
So
Um,
let me
and
jump
I
in
feel
there
like
because like I
that's
want to echo something you
yeah,
just said.
yeah.
And this is like the last probably 4 or 5 chapters of the book are talking about like when the founder is actually going out there and in earnest trying to raise a round. So there's a point where his mentor, like this angel investor, is telling, he goes in there and they're talking later. He's like, yeah, you asked me to ask when they raised their round. I did it. And they said it was like, 3 years ago, wait, how exactly did it go? So he goes in there, he comes back and he's like, oh, why did you tell me to ask them if they, raised 3 years ago? I was like, well, if they raised over 3 years ago, they don't have any powder, right? Because usually the way it works is the first 3 years of the fund, you're deploying your initial check sizes. And traditionally about half of the fund is reserved for that. And then over the next 3 years, you're looking to deploy your follow-ons in the half or the third of those initial startups that really do well and you want to double and triple down on. I don't feel that much pressure in terms of like I have to back different types of startups in year one versus year three, but you are running out of powder. So it's almost like
Yeah, makes
you
sense.
remember back when cameras took film and there was like 24 pictures on the roll. First
Yeah,
10 or 15 pictures, click, 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 click. But then when you're down to the last three, like, is that really the photo I need? Well, because if I take this photo, I can't take other photos. You get that mentality at the end, and the bar gets higher. But I also have half my fund at the end of year three, but that's earmarked for follow on. I can't make new investments. And that's one of the tips tricks to
makes
go
sense.
in there. Like after you've kind of pitched your heart out and it's your turn to ask questions, you ask, hey, when did you raise this fund? And if the answer is like 2.5 years ago, it's totally fair to say, oh, how much dry powder do you have in this fund? Are you raising enough? Because you may not be able to get anything for that VC.
And I think the other thing is understanding intentions, right? So to your point of like where they are, how much powder, like what they want, you have to understand what kind of founder you are. You know, are you the kind who's going to take opinions that come? Are you going to like stay head on to your vision and mission? Like you have to understand where you lie on the spectrum and then who you're taking a check from. I know a couple of founders in Austin who took checks from some VCs, and they weren't even like the GPs of the fund. They were like just associates deploying, but they were in charge of the relationship. They would go tell the founder what to do. And this is like someone who's just out of MBA who knows nothing about the space they're building in, but he's just coming in commanding, like, hey, I gave you money, so in this dynamic, I sort of can tell you what to do. And the founder was like, wait, who are you to tell me? Like, even though I agree you've given me money, but like, you
So
can't tell
let
me
me
how to run my
in part, and I'm going to
business.
disagree in part with that. The part that I
Yeah,
disagree with, and I'm pretty outspoken about this, is that as a founder, I don't think you should be one or the other on the spectrum between like I'm going to stick to my guns or I'm going to take advice. The golden rule here for a founder, and I wish I could remember who told me this because it's a really great way to put it, is I want founders that have well-reasoned but loosely held opinions.
I like that. Yes, I've heard
Why
this
are you
before
doing
too.
this? I want to have a good answer. But then if there's something that's it's based on a fact that's actually incorrect, and I can show them, well, you're basing it on a fact that's incorrect, then they should be able to take one look at it and be like, oh, you're right. I can change it. Don't just
100%. I
serve
agree. I
it.
agree.
Like you mimic whoever told you something last. So with that in mind, like a good investor is looking for people like that. And the kind of like, I'm going to tell you what to do is a sign of a novice investor. Now, the part I agree with 100% is the moment you take money from an investor, you are married to that investor for a decade, right? Less if things go to hell and you've got nothing, but probably about that much, maybe a year more, maybe a year less if you're an early stage investor. So you need to really be comfortable with the idea that the investor you're taking money from is somebody you want to be tied to the hip to. So if you get the vibe that the investor is going to tell you to do things when they don't know their ass from their elbow, are you being unreasonable or are they being unreasonable? If you truly believe and you ask people and they're like, no, no, man, you're right. Like they're just telling you to do it. And that's an investor ideally you should pass on.
100%. So you're do these investments. What's next in your journey? When does the venture studio start?
So, right now I'm doing about 6 or 7 things I think I may have mentioned to you in the past. So one of
Yeah,
them is I work with Second Century Ventures. They're the kind of sort of corporate VC arm equivalent of the National Association of Realtors. They run a later stage program for anything prop tech or anything that touches realtors. Doesn't have to be prop tech. Like one of their early investments is DocuSign, not prop tech, but realtors use it a lot. Been
yeah,
working with them on a different platform for kind of leveraging all these large realtor organizations around. So I do that, do a bunch of consulting and corporate innovation, do a bunch of my own SPVs in the up round of
yeah.
companies that I think are dream it, writing a book. That's actually taking out a bunch of my time. Like figuring out stuff like that conversation we had earlier about using AI to like segment create.
Yeah,
I'm probably putting more time than I should into that, but I learn by doing, so I enjoy learning something that I wouldn't do if I was just
nice,
using AI for like investment focused use cases. But what's next? I'll spend a decent amount of time, getting the book launched, and I think I'd like to go back full time on the investment side of the table.
nice. And what stage, what kind, what area, what industry, where are
So
you leaning?
the stuff that I'm really strong in, and I have been historically over the past couple of years, is prop tech and construction tech. I really love construction tech. There's a lot of great opportunities right now. But I've done a lot of different industries over the years. So I think anything B2B, I'm happy to do. I would do a B2B generalist fund, and I would be the guy that just happens to be especially strong in prop tech, construction tech, ed tech. So that's one idea. The other thing is like I think that most of us on the VC side of the table are kind of hypocrites, and we're hypocrites in a very specific way. So let's say I'm looking to invest in your startup. I want your startup to be like a quantum level better than the competition. I want it to be like visibly and obviously better. And then when I go out there and market my site, my fund to other investors, I'm like, oh, we're two really sharp guys, exit entrepreneurs, awesome networks. We can really help you at like the critical points in your startup's growth. Um, just like every other VC fund you spoke to over the past couple of weeks, we don't eat our own dog food like that. And I'm not going to be that guy, right? So I want to look for funds that have something unique about them that's not, that would pass my test. Like, what's unique about your startup? Oh, we work really hard. Yeah, no one says I'm a slacker. Right? Oh, great, no one says
Yeah,
our UI sucks, right? It's all
yeah.
quantum level, visibly and obviously different. So I look for funds, or I try to build funds that have a platform that makes them the first choice of the very best startups who have their choice of who they want on their cap table.
I like that. So quickly taking a small detour, right? So for someone listening who's earlier in their journey, who's working on an idea, validating, what are some VC side, or like what are some tips from the VC perspective you have to a founder who has an idea validated, hasn't raised, a little bit of traction? What should their next steps
Okay,
be?
let me take it even further back. Right. So the number one
Yeah,
question that we ask, whether we ask it explicitly or we're trying to like answer it like, implicitly across everything else we're asking, is generally why now. So an
yeah,
investor who invests in like drive-throughs or car washes, there's no why now to that. They're like, okay, I know this business. I think you chose the right location. I'm looking at your financials. Boom. But we're a tech startup where we're hoping that there's a potential for a 100x exit down the road. There has to be something about the startup that could not have been done 2 or 3 years ago. Now, it could be a technical change. Hey, GenAI is now democratized. Everyone can use it. That's a big difference. Before that, blockchain was revolutionary. I'm not a crypto guy, but being able to have a ledger list of transactions, that's like pretty impressive. Like it lets you do things you couldn't do before. Machine vision, speech to recognition. These are going even earlier back, like a mobile phone, smartphone. These are all things that enable different solution sets that just didn't aren't possible. So technical is one of them. The other could be regulatory, right? When Sarbanes-Oxley passes, a whole new category of startups that help you with SOX compliance, deregulation also. So there's got to be some um, specific concrete event that marks a kind of a state level disruption between what happened before and what happens now. Because if you could have done what you're talking about doing 5 years ago, I guarantee you a lot of other people have.
makes
And
sense.
either there's somebody very far ahead of you, in which case I don't like to bet on the horse that's a couple of laps behind, or everyone's tried it and failed, and that's usually because it's not something the market actually needs.
What would you say for, like, I'm just thinking about a couple like spaces I've looked at. So if there's no big why now, but there is a all the existing solutions are mediocre and there's maybe room for a better solution. Is that good enough or not? Or does it make sense what I'm
Yeah,
trying to
no, it
ask?
makes sense, and I get that a lot. They all suck. I'm like, well, you think they suck, right? So what you're proposing to do that would be better. So I asked you, number one, if it could have been done a long time ago, there are thousands, tens of thousands, hundreds of thousands,
100%.
hungry entrepreneurs. So you're trying to,
We're just
none of
looking.
them thought of this idea, not one.
Yeah,
Well, that's an argument of exclusion. That's hard to make. Right, so odds are that many of them did. And then you're saying, oh, many of them, they're all morons. They couldn't execute on it. All of them are morons, right? No, what's more likely is someone tried it, put it out on the market, and the market didn't care about it. Maybe it wasn't enough of an improvement to make people switch. Like, I'm gonna take something that works okay and but not great, versus something that may be better, but this is a mission critical thing for my business. I'm not comfortable taking that chance for a small improvement. So maybe what you think is better isn't better enough to make people switch. Or maybe shitty actually performs better. I have a good friend.
makes sense.
He would come and talk to our startups back when we had speakers, and he showed 2 pages for a site. One was like ugly, like Craigslist version 1.0 ugly. And the other was a really slick, well-designed page. And he goes, guess which one of these was our initial page versus our current page. And they all guessed the shitty one was their initial page and the slick one was.
Here's
He
the
goes,
other.
trick question. This was our initial page. We tried this and we went back to this. The shitty page converted better.
Makes sense. And I think that's when the shitty page converts really well, I think that's the sign of a really well identified problem statement where the customers are asking for a solution. Like they're wanting any sort of solution there because it's such a
Yeah.
big problem, right?
So
But to your point of, I feel
I'm gonna
like,
twist that and
yeah,
refine what you're just saying.
yeah,
What we think when we look at it as shitty, that's an aesthetic decision, right? So
100%.
the shitty aesthetic may actually be the less shitty utilitarian solution, right?
Absolutely.
So
Makes sense.
the
100%.
crappy version somehow speaks more directly to the painful need than the one that we think we look is nicer, right? So it's not intuitive, and if you think, oh, I got better, it's not intuitive. What you have is better. The only time I'm willing to make bets like that, with very few exceptions, is if there is a good why now. I'm like, great, I know why no one tried this before because they couldn't do it.
I like that. For the book, The Entrepreneur's Odyssey, is there, I know you mentioned everyone should read it and go for it. Is there a particular stage of founder it would resonate with really well? And I'm assuming there probably is like some niche within the
Yeah,
niche that
yeah.
you would say would really.
The two main ones are first-time founders about to or currently doing it. And, if they're anything like me, they're feeling pretty lost. Like, I don't know, I'll do it this way, right? This will save them a lot of time. And for the people who are thinking, do I quit my day job and do this, but I don't know what this really is? Those are the core. Those are your ICP, initial, customer profile. Next range around them, if maybe have done it a little bit more, or maybe people who are just curious about it. They got a bunch of friends who are doing it. They just don't know what that really means. And I sometimes joke it's also, if you're a founder, get two copies, one for yourself and one to give to your mom, so she stops asking you, "Are you going to go to law school or what?" Um,
Yeah.
yeah. So that's really the core. Sorry, I'll let you ask the questions rather than just ramble.
No, no, yeah, that's fine. That's fine. Yeah. But yeah, no, I was just thinking about getting some VC or like investing side opinions from you, right? So like for a founder who's raising around, I know a bunch of people who just got out of A16Z and the speedrun program they had, and they're, starting a raise again. What are your, two or three very high level tips of reaching out to VCs, what to talk about, how to perfect that pitch, and then figuring out what strategy of communication works? Because I've gotten a lot of people on the pod who have a very different approach to, hey, here's how you should do VCs, no do this, no do that, no here's the strategy. What's your take
Sure.
on this
So
space?
this is like the last four chapters of the book, but I'll give you like the number one, thou shalt not. Thou shalt not send cold emails to investors.
Yeah,
I've
100%.
received
Yeah.
maybe 10,000 cold emails. When I think about it, I sit down, I add up all the emails all the cold emails were actually led to investment. It rounds up to zero, not a single one. All you're doing is flooding my inbox and pissing me off. So even if, and this is very, I'm going to roll it back a little bit, 99.9% of the cold emails are utterly unrelated to my investment thesis. It's very clear that
Yeah.
they're just praying and praying. Let me give you a couple analogies. This is in the book. Right? You're going out there to do B2B sales. You're trying to get a customer to spend $50,000, $250,000 on your software. You're going to do a super high touch approach. You're going to understand exactly what that company does. You're going to understand exactly what that person does within a company. You're going to know exactly what their pain points are. And you're going to write an email that talks exactly about all those things. So that the moment they open it up, they're like, this guy gets me. And then when you want a seven-figure check from an investor, you're going to send them a generic, like totally,
Hey, I'm racing around.
what are you thinking, right? Like, hey, I'm raising around an
Yeah.
ad tech. You should give me money, even though I don't know that you invest in that. So it's like you got to think about it that way. It's sales, just like enterprise sales. Raising money is sales. To think about it in that mindset, you have to put the same effort into getting to know your prospect that you would for a large six-figure contract. It's a seven-figure investment. Let me roll while I'm on the rant. Let me keep going.
Yeah. Yeah.
So
Yeah.
the right way to do this. Sorry, hold on. Well, I'm seeing more and more founders do this because the AI tools make it so much easier. Right. The CRMs that came up, I can do drip campaigns, and they set them up badly. I write back and say, sorry, not interested. I still get 4 emails in a row from them. Fuck you guys, okay? If you're going to spam me, at least spam me right. Um, I'm taking like 5 seconds to respond to you so that you can maybe not hear that. But I
Yeah.
digress. So the AI tools make it that much easier. Like they'll go scrape whole lists from Crunchbase and then they'll invest or spam them and like, it's tempting. I get it. You're busy. You don't know what you're doing. But don't be that guy. Here's what you need to do. It's a little more work, but it's going to get you a lot better results. Start with you want to get to 100 plus investors that might be interested in your startup. You can go to Crunchbase and pull everyone down in your industry or anyone that invests in marketplaces, whatever makes sense for your startup, but then go through their recent investments to find three startups that make sense in this context. Hey, Avi, I see your friend Joe invested in Etsy, Craigslist, and Amazon. So I thought he might be interested in my marketplace for wildlife,
Whatever.
right?
Yeah.
So whatever it is, they're at least marketplaces, right? That sentence kind of makes sense. Or like I see your friend Jill invested in Uber and Lyft. Maybe they'd be interested in my scooter rental line, right? Okay, it's like car rental, scooter rental. That sentence makes sense. When you get that and they're asking you to introduce you to somebody else, You can read that and say, ah, that actually does make sense for my friend Jim or Joe or whatever. And you can do that. So you need to start with your broad list, however you get it, go through each one and qualify them by saying that, yes, they actually invest. Like prop tech's a big field. Just because I invested in a large, you know, a CRM tool for commercial realtors doesn't mean I'm interested in a check-in showing app for residential realtors. Right? Well, I
Yeah.
might not be. I might invest in multifamily. Who knows? So qualify that list. Once you've qualified that list, get a warm intro. Guys like me, non-gender specific guys like me, are among the most networked people on the face of the earth. If you can't get a warm intro to me, I don't know how you're going to do sales. Right? So invest in finding out who knows me. LinkedIn makes that as easy as it's ever been. Right? So figure out how you can get a warm intro to me and ask that warm intro to that mutual connector to make the warm intro. There's a lot more in the book
Yeah.
about cadence
The
of that, how many people you ask, and how to
yeah.
spread that effort around. But that's the gold standard. That's how you get a VC to open your email, and hopefully how you get a VC to open their check.
The one thing I was gonna say is I had a couple of friends who've started raising a bigger round recently, and what they were talking about was there's a big discrepancy in what the thesis is of the company, the person online, versus the kind of checks they're actually writing, right? So, like, one of the examples they gave was, oh, yeah, we're a seed stage, we do seed stage investments, but what they really do is B2B enterprise with 1 million ARR. Like, that's their filtering
Right?
criteria. But the thesis online says
So
seed,
some of the
B2B seed, or whatever,
yeah,
right?
let
But
me
yeah,
interpret that for you. So when that happens a lot right now, when the market is softer, the investors will raise their criteria. So when the market
when you say softer, you mean harder
harder,
to
you know, harder to
invest,
raise money, right? So when
harder to
yeah,
raise.
so
Yeah, yeah,
when
yeah.
it's like 2 years ago, the market's really frothy. Company goes out there can maybe raise a proper A round on under $500,000 of ARR. When the market is softer and there's not that many people throwing money around, lots less competition for the best deals, that same VC might say, "Yeah, you need $2 million ARR to raise your A round." Right, so it's going to change a little bit, and the website may
100%.
be up to date. And the word seed means different things, like how big a seed round goes up,
Yeah,
up, up until now. Like now we create new categories, pre-seed, or like we need a something between seed
yeah,
and A, so it's a post-seed route or seed extension. Right? There's great inflation too. So there's a bunch of that. But that's why I say you got to go look through what they've done, not what they say they do. Look at their last
nice.
10 or 20 investment. Look at them all. If they're a generalist fund, you want to go through and find the ones that make sense for you. Like, are they in the same industry? Are they the same customer base? Are they same business model? Right? If they're specialists, then that makes it a little easier. You're likely to have more hit rates on that, more hits on that just thematically. Go through it and make sure you have enough startups that make sense in the I see you invest in A, B, and C. So you should be interested in mine. That's what you got to do. It's what now you can't tell what revenue these companies had. It's not available publicly when they did it, but at least you know what round it was. Did they invest in the round
Yeah,
for such and such company? Okay, you know, good chances at the very least that they're a qualified angel.
makes sense. Well, that I didn't have any more questions for you. Do we want to briefly cover the book, the workshop you're talking about, and then where can folks reach out? Who should reach out?
Sure,
What's the
sure, sure.
best method to reach out?
Yeah. All right. So I want to confess
Yeah,
something. Um, I don't read a lot of business books, and the reason I don't
yeah,
read a lot of business books is they're boring. Right. Most of the books
100%.
are a
That whole bookshelf is just
oh man, I
business
feel
books.
for you. Like they're with a very few exception, they're in the apartment and out the apartment. Like the moment I'm done. So a lot of them are 20-page PowerPoints just stretched into 250 pages because publishers won't publish anything smaller than that. And they all have the same kind of Midwestern bland tone, like the same ghostwriter writes all the books. He's been writing it for the past 50 years, so I know it's not AI. Each chapter starts off with name drops, name drops, name drops, name drops, anecdote, 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 and a one page.
Analogy,
Oh
analogy,
yeah, and then one
analogy.
page at the end, it's like shaded box key points. Guess what? You rip out the 20 chapter endings and staple them together. That's all you needed to read.
Yeah, yeah.
Boring. It's in one ear, out the other. Even the books that are really good content, my eyes glaze over trying to read them. So when I thought about writing this book, my number one question for myself is like, do I really want to subject the world to that? Right? Do I really want to write something that people aren't going to enjoy reading? And the answer was hell no. I could have the most interesting stuff, but I'm not going to do it unless I can do it in a way that people actually like to read. And that's why I chose to write this as a story rather than
Nice.
as like, a handbook or instruction manual. It's basically the untextbook of what you need to be a successful founder. I use it as a textbook. In the courses I teach in entrepreneurship, it's pretty well at. So,
Nice.
oh, by the way, so if you're a professor who teaches entrepreneurship, let's talk, right? You're also part of the target market. I'll tell you how I teach the course. But that was my number one question. Like, can I say something in a way that's engaging and entertaining? So I'm not like all the rest of those boring business. I think I've succeeded. You know, about for yourself.
Nice.
Now, as of the recording here, sorry, the audio break. As of the time that we're recording this, the book's in pre-order. So it'll ship on May 15th. And as a special thank you for the people who are willing to take a leap of faith and order the book right now, other than my mom, who's going to do it anyway, I'm going to give, for the first 100 pre-orders, access to my startup masterclasses. And for context, this
Nice.
is the curriculum that I created for the Dream at Startups when I was running the program that we used throughout Dreaming. It's the same stuff that when we went later stage, I would give to my friends who ran other programs, like Techstars or what have you, as a way to, partly as a favor, but also as a way to like build my pipeline because their alumni were my prospects at that point. I've never given those courses, those master classes, to the general public before. I'm going to do it for the first time. I'm going to set aside 5 classes, capped at 20 people each on a variety of topics.
Nice.
And the first 100 people to buy the book, forward the Amazon confirmation link to me at Andrew, B as in boy, Ackerman at gmail.com and say, Andrew, I hope I'm one of the first 100, and I'll add you to the list, and you'll have access to that class.
Nice. And where can folks pre-order?
Right now, the best place to do it on Amazon. Name
Okay.
is The Entrepreneur's Odyssey. And because I like puns, the subtitle is A Novel Guide to Startup Success. Uh, so
Nice.
check it out. Oh, warning. There is a hardcover edition for libraries that costs $190. Do not buy that. I would not buy that. If you get there and you see that, just click over to the trade paperback. It's a more normally priced, and it has the cover art that I worked so hard on.
That's cool. And this ships May
It'll
15th.
ship May 15th.
Yeah, I mean, where should folks reach out?
Yes, the
What
best
do you
thing
want
to
them to
do
know?
is my personal website. I'm working on. Hopefully, by the time this airs, it'll be in better shape. But Andrew B as in boy Ackerman.com. They'll get some information about me, some information about the book. Ultimately, I'll have some information about the master classes we talked about, and I'll even have information when I get around to it about how I teach my entrepreneurship course. So if you're a professor and want to see if this makes sense for you, and all stuff if
Nice.
you're a conference organizer and you're like, oh, that's pretty cool. I wonder if Andrew can speak at the conference. That will be
Sweet.
there next
Cool.
week. All of that and more coming soon.
And we'll link everything, and I will aim to get this out in the next couple of weeks. I think my editors just need 2 weeks, so I'll just move it up a
Hey,
little bit
you want to
and
hear?
we'll work on that. Yeah.
Ask me what went wrong so far in the marketing of the book.
What talking about the book, what went wrong with marketing? What are you working on? What channels are you using?
There's a lot of things that are going on. I have some very good interns that are helping me out with this. But I had an in-person speaking engagement, and I'm like, what would be really cool if I made some custom bookmarks and I put the bookmarks on the chair. All right, let's see if that makes sense. Right, like if I can make a bookmark for X cents per bookmark, and the conversion rate is Y, I may make more of them. So kind of type for times on my intro. Like, hey, this is what I want. I would picture the book up here, the QR code here, turn over for testimonials, see what other people are saying about. On the back, I wanted to have the 2 testimonials, one from Dave Brown, who's the founder of Techstars, and one from Avi Safar, who ran DreamIt for a time. All the founders of DreamIt have also given me testimonials, but I wanted those 2. And she mocks it up for me, and it looks really, really good. So I click order. I didn't read the fine print because what I ordered was not a bookmark, but a mini bookmark.
Got
It's
it.
like 3 inches tall, and you need a magnifying glass to read it. It's kind of cool. Like if you look really close and look at it, it's got the cover of the book.
Yeah. It's legible. It's not
Well, yeah, that's because
non-legible.
you're like 15 years younger than me. If you're on the VC side, you can't really read any of that,
Makes sense.
but the founders could read it, and the QR code still works. But like, yeah, th this was not what I intended.
My own
Comes in life.
part of the journey.
Happens
It's
in everything. Happens in life.
sweet. But no, I appreciate you coming on. We'll link everything. Um, I'll click stop in a second, but yeah, any last words, anything you want to mention?
For anyone else who's like a VC, like this is a fun podcast. You should do it. Founders too, if they'll have you.
I'll I'll start getting testimonials, but
Yeah,
yeah.
I'll write you a testimonial.
Yeah.